All right, everyone, welcome back to the deep dive. Today, we're going to tackle a topic that might not be the most exciting, but it's certainly important. We're diving deep into HMRC's plans for 2025 and what they mean for you, the average UK taxpayer.
You got it. We've been looking at some sources that reveal some pretty interesting stuff, from HMRC's increased resources to who they're targeting and even some tactics they might be using.
Yeah, and we'll also give you some practical tips on how to stay on HMRC's good side and maybe even save a few quid along the way.
Right, so let's kick things off with the big picture, shall we? The UK has a bit of a tax problem at the moment. It's called the tax gap.
The tax?
Yeah, it's basically the difference between what HMRC should be collecting and what they're actually receiving. And get this, it's a massive 35.8 billion pounds.
35.8 billion. Wow, that's a huge amount of money. So what's HMRC doing at this shortfall? Are they just going to let it slide?
Not a chance. The government's given them a serious boost. We're talking 1.6 billion pounds over 5 years to hire thousands of new staff.
More staff, more money. Sounds like they're gearing up for a proper crackdown.
Definitely they are under pressure to close that gap.
But how are they going to find all this unpaid tax? Are they going to be peeking through everyone's windows or something?
Well, not quite peeking through windows, but they do have this rather sophisticated system called Connect.
Connect.
Yeah. Imagine it as a giant data hub where HMRC pulls information from all sorts of places: your bank accounts, property records, online activity, even social media.
Hold on, social media. Are they checking our holiday snaps to see if we're spending more than we declare?
Well, it's all above board, of course. It's not really about spying on your holidays, more about finding patterns and inconsistencies that might suggest someone isn't declaring all their income.
Right, so if someone's posting about their luxury villa in Spain, but only declaring minimum wage earnings,
Yeah.
HMRC might start asking questions.
Exactly.
So they're basically connecting the dots, literally.
That's the idea.
Okay. But this Connect thing, it's not just for big companies and millionaires, is it?
Actually, you might be surprised to hear that small businesses are one of HMRC's biggest targets.
Really? You'd think it would be the big corporations trying to hide their millions offshore.
Well, they're certainly on HMRC's radar too, but small businesses account for a surprisingly large chunk of that 35.8 billion pound tax gap.
Why is that? Are all these small businesses deliberately trying to cheat the system?
It's often not intentional. Small businesses might have less experience with complex tax rules, or they might not be keeping the best records. It could just be honest mistakes that lead to problems down the line.
So even if you're not trying to pull a fast one, you could still get caught out if your paperwork isn't up to scratch.
That's right. And this is where those handy tips we mentioned earlier come in.
Okay, so let's talk about those tips. What can we do to stay on HMRC's good side?
Well, the first and most important thing is accurate record keeping. Whether you're a freelancer, a business owner, or just someone with a few investments, you need to keep detailed records of your income and expenses.
Makes sense, especially with this Connect system watching everything we do.
Exactly. HMRC can now easily spot inconsistencies, so it's more important than ever to be organized and transparent with your finances. No more shoving receipts in a shoebox and hoping for the best.
Definitely not. So we've got to be organized to keep good records and be prepared for HMRC to be a bit more thorough than they have been in the past.
That's right. But don't worry, we'll delve into more specific tips and strategies later in the show.
Sounds good.
But first, let's look at some of the specific tactics HMRC might be using in their crackdown.
All right, let's unpack this. What do they got up their sleeves besides this Connect system?
Well, they have a few different approaches depending on the situation. Sometimes it's a gentle nudge, like sending out targeted letters or emails to certain groups, reminding them about common mistakes or changes to the rules.
So a bit of a friendly reminder.
Exactly. But they also have more serious investigations for cases of suspected tax evasion.
Okay, so it's a bit of a carrot and stick approach. Be good, and they'll be nice. Try to be clever, and they'll come down on you like a ton of bricks.
That's a good way to put it. And it's worth remembering that even if you're not intentionally trying to avoid tax, mistakes can happen, and those mistakes can be costly. There are penalties for late filing inaccurate returns and all sorts of other things.
So it's not like we need to be extra careful.
It's all about being informed and prepared.
Right, so let's get informed. We'll be back after a short break to delve deeper into the world of HMRC's tax plans for 2025. Stay tuned.
Welcome back to our deep dive into HMRC's tax plans for 2025. We've talked about the reasons behind their increased activity and that all-seeing Connect system, but what happens when they actually spot something dodgy? What does an HMRC investigation look like?
Right, because nobody wants a knock on the door from the taxman, do they? especially if you've been trying your best to do things properly.
Exactly. It's important to remember that HMRC has different levels of investigation depending on the situation. For most people, it might just start with a simple letter or email asking for clarification or some missing documents.
So it's not all dawn raids and dramatic arrests.
No, not at all. In fact, HMRC often takes a nudge approach, especially for smaller discrepancies or unintentional errors. They might send out targeted letters or emails to specific groups like landlords or self-employed folks, reminding them of their obligations or highlighting common mistakes.
So a little reminder to keep everyone on the straight and narrow.
Precisely. And they've even got these things called one-to-many campaigns, where they send out mass emails or letters to taxpayers who might be at risk of noncompliance. It's a cost-effective way to encourage people to double-check their returns and fix any errors before they become bigger problems.
That makes sense. A bit like a friendly warning shot across the bow.
Exactly. But for more serious cases of suspected tax evasion, HMRC has a range of tools at their disposal. These can include penalties for late filing or inaccurate returns, and in some cases, even asset seizure or prosecution.
Oh, wow, that sounds serious. So what are these penalties like? Are we talking a slap on the wrist or something more painful?
Well, even seemingly minor slip-ups can be costly. The standard penalty for late filing is £100, but it can quickly escalate if you keep missing deadlines. And remember, it's not just about the financial penalties. There's also the stress and hassle of dealing with an HMRC investigation. Nobody wants that hanging over their head.
No, definitely not.
Mhm.
So what's the best way to avoid all this trouble? Is it just a case of filing on time and crossing your fingers?
Filing on time is definitely a good start. But as we mentioned earlier, accurate record keeping is crucial. Whether you're a freelancer, a business owner, or just someone with a few investments, keeping thorough records of your income and expenses is absolutely essential.
Especially with that Connect system watching everything we do.
Precisely. HMRC can now easily spot inconsistencies, so it's more important than ever to be organized and transparent with your finances.
Right, so no more shoving receipts in a shoebox and hoping for the best.
Definitely not. And if you're unsure about anything, don't be afraid to seek professional advice. A good accountant can be worth their weight in gold when it comes to navigating the complexities of the tax system.
That's good advice, but I think a lot of people are put off by the cost of hiring an accountant. It can seem like an unnecessary expense, especially if you think your tax affairs are relatively straightforward.
I understand that concern, but think of it this way. The cost of professional advice is often far less than the potential cost of penalties, fines, or even legal action further down the line.
So it's a bit like that saying, penny wise and pound foolish. You might save a bit of money by doing it yourself, but it could end up costing you a lot more in the long run.
Exactly. And aside from potentially saving you money, having an expert on your side can take away the stress and uncertainty of dealing with HMRC. It's like having a good lawyer. You hope you never need them, but it's reassuring to know they're there if you do.
Absolutely. Peace of mind is priceless, especially when it comes to something as important as taxes. But it's not just about damage control, is it? A good accountant can also help you be more proactive and make sure you're taking advantage of any legitimate tax-saving opportunities right.
Absolutely. They can help you structure your finances in the most tax-efficient way possible, ensuring you're claiming everything you're entitled to. This is particularly important for anyone with complex financial arrangements such as investments, property, or overseas income.
Right, so they're not just there to keep you out of trouble, but also to help you make the most of your hard-earned money.
Exactly. So as you can see, while HMRC's crackdown might seem a bit daunting at first, there are ways to navigate it successfully.
Okay, so we've covered the why and the how of HMRC's stepped-up efforts. Now let's talk about the who. Who are they actually targeting with all this?
Well, from what we've seen in these sources, HMRC is casting a pretty wide net, but there are certain groups they're keeping a particularly close eye on. Shall we delve into that?
Let's do it. Because forewarned is forearmed, right? So who exactly are they focusing on?
Right. So as promised, let's talk about who HMRC is keeping a close eye on. We've talked about why they're doing this and the tactics they use. So who are the targets?
Yeah, because if we know who's in the spotlight, maybe the rest of us can stay out of trouble.
Exactly. And one of the most surprising things we found is that small businesses are actually bearing the brunt of this crackdown. They account for a whopping 60% of the tax gap.
Really? I would have thought it would be the big corporations and the super rich trying to hide their millions.
Well, those groups are definitely on HMRC's radar, but it seems small businesses are their main focus, particularly those in sectors with a high risk of tax evasion.
Okay, so like construction, hospitality, maybe online businesses?
Exactly. Those are some of the key areas HMRC is watching closely. And there are a few reasons for this. Firstly, smaller businesses often have fewer resources and less expertise to navigate the complexities of the tax system.
Yeah, it's easy to see how things could slip through the cracks when you're busy running a business.
Right. And that can lead to unintentional errors and noncompliance. And then there's the issue of phoenixism, which we touched on earlier. This is where a business deliberately shuts down to avoid paying debts and then reappears under a new name.
Ah, yes, the old phoenix rising from the ashes trick. But I thought HMRC was wise to that now.
They are getting much better at identifying and tackling these schemes thanks to their data analytics and the Connect system.
So small business owners need to be really careful and make sure they're doing everything by the book.
Absolutely. Meticulous record keeping, seeking professional advice, and staying up to date with any changes to tax regulations are really important.
So it's not just about being honest, it's also about being organized and informed.
Exactly. And it's not small businesses and HMRC sites. They're also focusing on individuals with side hustles and those working in the gig economy.
So people earning extra cash online through platforms and things like that.
Exactly. The rise of platforms like Uber, Etsy, and Deliveroo has created a whole new world of income generation, and HMRC wants to make sure that all income is properly declared regardless of where it comes from.
Makes sense. You can't exactly hide your earnings when the platform itself is reporting them to HMRC.
That's right. Since January 2024, these platforms have been required to report earnings to HMRC, so it's much harder for individuals to slip under the radar now.
So even if you're just selling a few bits and pieces on Etsy or doing a few deliveries, you still need to declare it all.
Absolutely. And of course, we can't forget about wealthy individuals and their fondness for offshore accounts.
Ah, yes, those trying to stash their cash in sunny tax havens.
Inheritance tax is another area where HMRC is seeing a lot of underpayment. They're using sophisticated tools to identify undervalued assets and uncover hidden wealth.
So basically, no matter who you are or how much you earn, HMRC is watching.
The key takeaway for all UK taxpayers is that HMRC is becoming increasingly proactive and tech-savvy in its pursuit of unpaid taxes.
So ignorance is no longer an excuse. We all need to understand our obligations, keep accurate records, and seek professional advice when needed.
And remember, it's always better to address any issues with HMRC voluntarily rather than waiting for them to come knocking.
Right, getting ahead of things can make a big difference.
So to sum up, while nobody enjoys paying taxes, it's our duty to contribute our fair share to fund essential public services.
And by staying informed, being organized, and seeking guidance when we need it, we can all navigate the complexities of the tax system and stay on the right side of the law.
And hopefully avoid any unwanted attention from HMRC.
Well, that brings us to the end of our deep dive into HMRC's tax plans for 2025. We've covered the reasons behind their increased activity, the tactics they're using, and the groups they're targeting.
Remember, knowledge is power, especially when it comes to your taxes.
If you have any more questions or concerns, we encourage you to visit HMRC's website or speak to a qualified tax professional. Until next time, stay savvy, stay compliant, and we'll catch you on our next deep dive into another fascinating topic.